actually CRISIL, which sees a revenue growth of 7 to 9% for the FMCG sector in FY25, led by volumes and mildly some realizations as well. Of course, underlying the revival in rural demand and steady urban demand as well. We do have with us Anuj Sethi, the Senior Director at CRISIL Ratings, joining in now to give us a detailed outlook on what they expect from the FMCG sector this year. Thanks a lot, Anuj, for joining in. The first quarter updates are in. There are signs of recovery, but if we had to put a number to that recovery, 7 to 9% is the revenue growth that you are targeting this year for the sector. Could you break that up in terms of volumes and price, and what sectors or what categories are likely to outperform?
Sure. Good afternoon, Mangalam and Ekta. We expect, similar to last fiscal, this fiscal also, the growth in the FMCG sector will be largely driven by volumes. To break it up, almost 6 to 8% of the growth will come from volumes and about 1 to 2% from realizations. And in realizations also, it will be driven largely by minor price hikes taken in certain categories to pass on, the price of milk, wheat, sugar, which has gone up, and also higher marketing and ad spends, and also the premiumization game, which is being played in some of the segments.
Okay. Can you break up the growth, the segments in terms of growth, for example, F&B, personal care as well as home care segment? What are you expecting in terms of growth within each of these segments? Where do you expect an outperformance and an underperformance, and why?
Sure. See, if I to break it up, the home care and the personal care, these two together account for about 75%. Of course, home care would be almost 50%. And the last segment would be the personal care, which would be around the balance 25%. We expect both home care and food and beverages will grow at about 8 to 9%. The reasons could be different. The home care would be largely led by urban demand. And this is a segment which has been outpacing all segments in the recent past. The food and beverage segment will also be driven by a revival in urban demand. The rural demand. We saw that already since the last quarter of fiscal 2024, where actually rural demand outpaced urban demand. And that was true of the food and beverage segment as well, which is the largest segment, almost accounting for 50% of the revenues. We don't see any segments per se underperforming. Even the personal care segment, which is expected to grow at about 6 to 7%, is slightly slower than the food and beverages as well as the home care segment. But one must realize that even this segment is almost doubling its growth rate compared to last year. The personal care segment is highly penetrated, and there is also downtrading happening in certain segments, which started during the period of high inflation. But even that segment we expect to grow at about 6 to 7% this year.
For the sector at large, what's the kind of margin growth that you are anticipating? And in that, what do you think are the categories that will see the highest margin expansion? Because you are also penciling in margins being limited by the increase in ad spends, etc., which we've seen all of last year. This year, what's the kind of spend increase that you foresee?
Yeah. See, if you look at the ad spends per se, as a percentage of sales, they went up by almost 100 bips last year. We are anticipating another 25 to 30 bips increase on the increase of last year, which will, constrain significant margin expansion. And why this is being done is because there is intense competition, plus a bit of downtrading, which is also happening. Having said that, we see the home care segment where the margin expansion will be the largest, because that is largely driven by the urban demand. This will be followed by the food and beverage segment, and lastly, the personal care segment.
Okay. Anuj, I know you can't talk stocks, but just wanted to get a sense from you in terms of, what happened with Titan, where the standalone sales growth was at around 9%. It was below estimates of around 11%. The jewelry sales also missed estimates. The street is worried about demand as well as the high gold prices probably impacting the segment. Do you think that's a temporary blip, or is that something that you think would probably be, something that you would monitor for the rest of the fiscal as well?
We'll talk about the retail sector in general. What we saw clearly, especially in some of the discretionary-led spend was that there was some postponement because of high prices. For example, in jewelry segment, gold prices peaked at their all-time high in the quarter. Of course, they've also come down, but that did put off some of the purchase or purchases are postponed. Secondly, if you look at it vis-a-vis last year, the first quarter of last year, this year in the first quarter there were only 5 or 6, auspicious wedding dates, which means that uh, the wedding season also is getting pushed a bit to the next and the third quarter. So this is also one of the reasons why the retail sector got a bit impacted, in the first quarter, and this is true also for some of the wedding-led apparel and not just jewelry.
And finally, before we let you go, I wanted you to tell us about, large players versus emerging players, the competition that you're speaking about. Because typically what happens is during inflationary times, the larger players gain market share. As inflation abates, the smaller players start to undercut the larger players and then, try to claw back their market share as well. So in light of that, this year, how do you fare the larger players will do versus the smaller players, unorganized sector, and some of the mid-tier companies as against the larger companies?
I think what has happened in the FMCG space, especially, is that in 22 and 23, when inflation was a bit high than what it is now, we did see a bit of downtrading happening and consumers shifting to more the mid-sized and certain state-focused FMCG players. That is now changing since last year. Because inflation has moderated a bit, and we are seeing the strategies adopted by the larger players so playing fruit. Clearly, I mentioned the 100 bips expansion in ad spends being one of them. So we will expect that there will be a better growth seen by FMCG players overall, and large players should continue to consolidate their position in a lot of categories. Of course, food and beverage will remain the most competitive, and here is where the mid-size and the state-focused players also have emerged pretty strong. But other two categories, the home care and personal care, is where we see the larger players gaining more share this year.
Okay, all right, Anuj, we're going to leave it on that note. Thanks very much for joining in and giving us your perspective on the FMCG space, which seems to be the flavor of today's trade in terms of news, at least. Just a quick check on